Morning, guys. Thanks for dialing in. I've just got a couple of moments now, just let a few more people in from the lobby.
Can you hear me, Brad?
Yes, Steve.
Yeah, perfect. So it's allowing my mic on and off now.
Brilliant.
Okay, so Brad, okay, make a start now, mate, I think?
Yeah.
Yeah, right,
Yeah,
brilliant.
that's
Okay.
good.
Right, guys, we've still got a few people coming in and out of the lobby at the moment. We'll just make a start, just after 10. So firstly, morning all. Thank you all for dialing in to what is now the third in the series of these webinars that we at Hodge are running. We started with our holiday lets, moved across to the later life market, and now today we're going to be focusing on our professional mortgage product and the mortgage market and those complex cases, many with complex income attached to them. Now, the aim of today is to give you guys solutions to many of these cases, but in an ideal world as well, to bring some of that business across to us at Hodge as well, if that's okay with you guys. So before we get into it, just a couple of quick introductions. So myself, I'm Stuart. I am the Business Development Manager for Wales, the Southwest and West Midlands. Joined today is my colleague Brad, and now Brad covers a massive part of the country, from the M4 corridor from Swindon up to London, as well as all the South Coast, and up into the East Mids, covering Nottingham, Derby and Leicester.
Have car will drive, yeah.
So between us, we cover, as you can tell there, about a third, maybe just a little bit more of the country. So hopefully there's quite a few brokers on here who will already know us already. We also have our head of mortgage originations, Rob Ford, joining us today. Rob's going to be answering any questions you may have after our presentation at the Q&A session. So if you have got any questions you have as we're going through the presentation, please do use the chat facility. And we'll pick them up as we go along. And if we can't answer, if we don't have time at the end, we'll take them offline and we'll come back to you as soon as we can. We're also lucky enough today to be joined by a member of the broker community, Steve Farrell, who's going to be giving us a true life example of how he used us on a professional case, his experience and how he found the whole process as well. Steve, if that's okay?
Hi, guys. Yep, absolutely.
Brill, thanks, mate. So today's session, I'm just going to run a little like this. We're going to start off with who is actually a professional. Brad's going to talk you through who we see as professional clients and some of the enhancements we've made around the product as well over the last couple of months. I'll then take you through what we class as the personal touch here at Hodge. We're covering off the reasons why we say yes as well. And then we'll bring that criteria to life with a couple of true life case studies. So I'll run through one, and then Brad will speak with Steve and get his experience as well. And then we'll bring the session to close with a Q&A session with Rob again. So again, any questions you have, guys, as we're going along, please do use the chat facility. We'll pick them up and we'll come back to you as soon as we can. So to kick things off, Brad, over to yourself.
Thanks, Stu. Thanks very much. Good morning, everybody. Before we crack on and start looking at the slides, I think it's really important for us to point out that 18 months ago, when we became interested in putting out a professional mortgage product, this was all completely new to us. And what started out in very much a test and learn environment, we've now seen that the professional mortgage product that we've got continues to evolve. And we'll look at some of the enhancement as Stu's mentioned. But what we decided to do here was, by using our knowledge and expertise in the later life market, we brought that across to both the professional mortgage and our holiday let product. And we felt there we'd earned the right to play in this new area, this new arena, and give ourselves this opportunity. So what we'd also like to ask really is, what is a professional and why do they need a professional mortgage? Now, a lot of that is either down to their scenario being unusual or complex, or actually the makeup of their income being complex as well. So what I would like to do first of all is start by looking at some of the good news about this product from a Hodge perspective. So Stu, if you wouldn't mind just rolling on. So as I said, we've only had this product 18 months, which is a pretty short period of time in terms of it being available to whole of market. And as you can see already, the success is there. 146 odd dips. The average LTV of our clients using this product is only 78% LTV. The loan size is pretty high, just under £400,000, and 60% of our business has actually been written on our 2-year fixed rate mortgages, which is kind of indicative as to where the market is at this moment in time. Lots of upheaval, as you guys are already aware, and a lot of people are not willing to confirm or connect onto a 5-year deal. They'd rather just sit on a 2-year product at the moment and just see how the market rides for this moment in time. So that's the story so far. So today's professional mortgage clients are looking or hoping to expect more. What we've seen is that these 4 areas here about the complexity, the knowledge, the flexibility and the options, that works from both sides. That works from Hodge as a lender, and it also works from the clients that we get in terms of inquiries from you in the broker community and what you're trying to do. The bottom line here, though, for me, is the fact that we are a very strong lender in terms of flexibility, providing solutions and being able to communicate. And nearly all my brokers love the fact that they're able to pick up the phone, not stuck on hold for hours like certain lenders out there that we won't mention, and they're able to discuss what their clients want to do. And they have a conversation with us that either ultimately leads to us making a decision for them, or upon referral to Rob and his fantastic team of underwriters, we then get a solution based on what we've been told or advised by you in the broker community. And from a complex point of view, your professionals, it's not, as we said, just about the makeup of their income. It could be the status of their business if they're self-employed. It could be the bonuses, the commissions or the overtimes or anything like that. They need clarity and they need to know what a lender will be able to use in getting their client the mortgage they're looking for. From a knowledge perspective, we're very strong with this. The underwriting team that Rob leads, the likes of Kirsty, Steve, people you've already spoken to, if you've already gone down this route and used us, very, very knowledgeable, fantastic points of referral, both for us as BDMs and for you guys when you speak to them directly regarding the product. And from a flexibility point of view, I think today's client, as well as today's advisors and brokers, they want products that are flexible, that enable the client to be able to do certain things like overpay, like payment holidays, or all these sorts of things. And we're very much obliging in that area. So, Stu, next slide, please. So, a true professional mortgage. We touched on the fact that we've made a lot of enhancements. These enhancements that we've done, a lot of them have come from us, but also the majority have come from you guys in feeding back to us the sort of things you want to see, or the extra and additional things that you think this product would benefit from. So on the left-hand side here, you'll see that when we started this product back in December 22, it was a limited sector, dozen or so of the top professional people that we wanted to go out to. And we were starting it based on these clients being either newly established or relatively new to their industry between the ages of 21 and 50. And at that point, we were saying that they needed to have a minimum of 30k as a sole applicant or 50k as a joint applicant. Fast forward to January of this year, and as I said, the involvement and the enhancements start to kick in. You'll now see a massive list of people that we can deal with in the professional sector, but this is a non-exhaustive list. If you've got a client that you know has studied, gained a qualification and wants to come to us for a mortgage, if they're not showing on there, doesn't stop you from picking up the phone, having a chat with myself or Stewie or the TBDMs and seeing whether or not this is something we can help you with. Now, this product is available from applicants from the start at 21, practically right up to the way until retirement. So lots of opportunities for them to continue their journey all the way through with ourselves. And as we stand at the moment, no minimum income on either sole or joint applications. Stu, over to you, mate.
Thanks, Brad. Guys, I think you can see just from listening, from just listening to what Brad was saying there, we do listen, we do learn from your feedback. When we first launched this, myself, Brad, and the other BDMs were going out and selling this product to you guys, and you'd come back and say to us, well, do you class us as the professional? And we'd have to sit there quietly and just shake our heads and say no. Whereas from feedback from you guys and listening to what the market wanted, we brought in these extra criteria changes now. And that's just one of the little things we mean when we talk about the personal touch that we offer at Hodge. Because who is a professional? It isn't just a closed shop. We are looking for those people who have worked their way up, put the hours in, got qualification in the chosen field. You're everyday professionals. So yes, we look at the accountants, your doctors, your vets, obviously, but we'll also look at, like Brad said, your teachers, your nurses, your midwives, your bank nurses, those everyday professionals that have worked and worked and worked to get the qualifications. We do talk to underwriters on a regular basis. As Brad mentioned, we've got some great ones, Kirsty and Steve, for example. I'm sure many of you guys have known. Rob's on the call and we confirm as well that we do have these open channels that we can discuss the cases and get them through for you, because this isn't a free-for-all. It's not going to fit for every single applicant, we know. But me and Brad always work on the perception that if you don't ask, you don't get an answer. So if you have anyone out there that you think might fall into this, or you want a conversation about it, just speak to us. Just speak to us about it, because there might be something that we can do and help these people achieve what they want to achieve. But affordability is still key, regardless of what we say, regardless of what any politician said at the moment. Let's be perfectly honest. We are still in a cost of living crisis. It is far more expensive now than it was 2 years ago. And many people haven't seen that increase in their salary matched out of their weekly shop or even their mortgage. And that financial landscape means that the reality of affordability has changed for everyone, be that you guys, be that the applicants, be that lenders as well. Long gone days when I first became a BDO, first worked in mortgages, where you could simply say, oh yeah, affordability is 4.5 times. And it is no real surprise that a lot of lenders, us included now, will proactively tell you that we'll do 5 times income up to 90%, or even 6 times up to 80% across joint applications. So for you guys, what I will say is just get to know your respective BDMs. If it's myself, if it's Brad, if it's Abs, if it's Hema, if send the telephone BDM to Hodge, or if it's any BDMs from any lender, realistically get to know them. Find out about a lender's background, stress tests, and understanding and affordability, because it will differ, and you guys will know this better than most, and it can differ massively from lender to lender across the spectrum. Now, to maximize that potential affordability for our professional clients, we have enhanced the criteria across a number of areas, and some of those ones you can see on the screen. We've taken the term longer. We've now moved our working age up to 80 in line with our later life products. We look at future earnings, and we'll come across we'll talk about some other key USPs in a moment on there. But it is that personal touch we keep mentioning. Each of these cases you place with us is assessed on a case-by-case basis. They are done like that. And as BDMs, we will work with you. We'll work with an underwriting to maximize the affordability and take as much of the applicant's income as we possibly can into account. But why else would you use us at Hodge? You know, we're not the biggest in the world. Are we best on rate? Well, no, we're never going to be best on rate. We're not big enough to compete with your high street lenders on this one. Will we be competitive on rate? Yes, we will always be there or thereabouts on rate. But this is specialist lending. We are a specialist lender. Myself and Brad have worked across the specialist spectrum, not just at Hodge and previous lenders before. And it isn't about rate. It really, really isn't. If it was about rate, you wouldn't be picking the phone up and speaking to us. It is about providing that solution. It's about getting the person what they want now, rather than having to wait 6 months, a year, 2 years to get the extra income or the extra confirmation the high street lenders want. This is why you're going to be using us. But I suppose the important thing is the criteria, so why and the reasons we say yes to it. So we're just going to pick out a couple of these. I'm not going to go through each individual one for you. So for example, an employed person. We can look at someone who is about to get a promotion or a pay rise and use that for affordability purposes, as long as we've got confirmation of that going forward, and it's within 3 months of of completion for you. As long as we've got that, we can use that, and we can go up to 90% on that one. A newly qualified teacher with a copy of a contract, they might get a contract in July, not start in September. Again, we can use that for affordability purposes. We just need to know that they've started the job and actually earning money before we complete on it. A locum or supply teacher potentially, we'll treat them as employed if they are registered with a local authority. If they are historical locum or supply, we're just looking for 6 months remittance slips. And again, we'll analyse that and again, treat them as employed for you. And you move across to your self-employed and contractors. These are an area where people have been massively restricted since COVID. We can look at things like retained profits. We can use retained profits, dividends, plus salary for the right client. Again, if you've got people like that who are looking to maximise their affordability, just speak to us. Pick up the phone. Are we going to say yes to every single case? Probably not. But I bet we say yes more than we say no to at the moment. We'll use that 1 year's trading with a projection going forward. And that new partner one is a big one. I bang on about this a lot of time. I know Brad does as well when we do our standard presentations and our roundtable events. If you've got someone who's gone from being a PAYE accountant, for example, and then joins a practice, and within a month, within 2 months, they find this dream house and they want to buy it, the majority of high street lenders are going to want to have 1, 2, even 3 years figures. We will go off a letter from the practice manager, the firm's accountant, or the senior partner, and use their share of profit. And that is what we'll use for affordability purposes. Again, we might not be the cheapest, but we will achieve what that client wants to do now, rather than having to wait a minimum 12 months, probably 24 months, even 36 months with most of high street to buy that property there and then. You may find in 2 or 5 years' time, you can get them a much cheaper option somewhere else, or they've got their books and you flip them out. That is specialist lending, guys. That is what we do. We are there to help these people now, rather than having to wait for the future. Now, interest only is a big one for us. Always has been, historical late life lender, but we introduced interest only, Brad. I think it wasn't when we first launched the product, maybe it was just repayment. We launched interest only within the last 12 months or so.
Yeah.
So we launched interest only, guys, because we know interest only well. Now, we will stress interest only as a true interest only. So there's a lot of lenders who go out there and say they'll do 75% interest only. They'll do as a repayment. We don't. So the term isn't really the important thing here. It is about the affordability for the client. And if you compare what a high street will do, probably most will top out 65%. And again, we'll quite likely stress you as that repayment. We could achieve a lot more for us. Just to give an example of the difference in the two, if you take our average loan size of 394k, which Brad mentioned earlier, 25-year term at 6%, a repayment basis is going to cost the applicant approximately 2.5 grand. On interest only, it's approximately 1,900. It's about 600 quid difference. Now, interest only isn't for everyone. I can't stress this enough. I know we do it as well when we do our later life lending seminars and webinars. But I hope for the right customer, the right circumstances, it can be a brilliant product. It can help people keep their costs down. If you've got people who may have big bonuses coming through and know they're about to have a cash lump sum and they just want to maintain their standard of living for a time being, then consider the interest only option for them. It isn't this dirty word anymore, as I keep banging on about for the last 3 years. It is an ideal solution for the right client in the right type of circumstances. We'll also mention the consolidation. It will go up to 85% on debt consolidation on a repayment basis. And there's many other reasons we can use for capital raising, including your home improvements. We also do a lot of school fees. So we flip back to your doctors of the world. A lot of those doctors potentially may have children in private schools, and they do remortgages with us to raise the funds and to do the private school fees off there. So again, anything like that, as long as not for business purposes, we can consider on a remortgage side for you as well. Now I'm going to touch briefly on some property enhancements we've made, and this is on the professional, but across our range of all products, our residential products, is the annex. Now, annex is used to scale a lot of lenders, but we've looked at this and realised we can make some really good grounds on it. So if you've got someone who's got an annex and they want to move their parents in, or they might want to put the kids in the corner for a little bit, or they can see the potential on there and they want to use the annex and rent it as a short-term Airbnb or a holiday let, make the property pay for itself, then we can actually consider this as well. So if you've got any of these weird or wonderful properties, again, ping them over to us. We can have that conversation with Rob, the rest of the underwriters, or even our property manager, Jonathan, and we can normally get fairly quick answers back for you on whether we consider that property subject to valuation. Now, all this is well and good, and we've talked you through what we say we can do, but what you guys really want to hear, I suppose, is this put into practice. So we're going to do one little case study here, and then Brad's going to bring Steve on and talk through Steve's experience as well of using us. So this is Joanne. This is an actual inquiry I had in the last couple of weeks. I'm changing the name, obviously, for data protection reasons. But Joanne is one of our everyday professionals. She's one of the new customers now that we can help since we've made the changes. Joanne is a newly qualified teacher. She's literally just got confirmation now that she's got a job. So 1 year contract, as most new teachers will get now, and I know this well because my wife, my sister-in-law, my best mate, they're all teachers. Most will only get 1 year contracts. But she's not due to start in September. So she's got no income coming in. She has got a partner who's earning as well at the moment. They've just found a new build house they want to buy. And as most new build firms, any who deal with new build firms, there's a fair bit of pressure now to get this turned around quickly. And they've set Joanne a completion date at the end of September. Now, Joanne's showing a lot of lenders, and I was in this situation when myself and my wife were buying our first home. Shell was a newly qualified teacher, and we struggled as well to get that mortgage because of Shell's occupation. Hodge, we can use that contract, as I mentioned before. We can use that contract for affordability purposes. So we can start the ball rolling. We can get the case to offer. We can do all the legal work. And before we complete, we just need to know that she started that job. She is actually teaching, and we can complete. Joanne and another half then can move into their home. They can pick the settee, they can pick the big plasma television, and they can start their new lives. This is just one of those little ways that we are there to actually help and support you guys. With the new build firms as well, as you mentioned, with the help of the underwriters, we've agreed we can turn these round within 24 hours for you to get that little bit quicker. And we've also just increased our builders cash incentive from 2.5% up to 5%, further enhancing that proposition for you guys. So that is my example there. I'm going to hand back to Brad now, who's going to bring on the first of our special guests. Brad?
Thanks, Stu. Steve, good morning.
Morning, Brad.
How are you?
Yeah, very well, thank you.
Good.
Yourself?
Yeah, all good, thank you. Appreciate you coming on and giving us your time to explain about your experience of using Hodge for your professional client, who, as I remember, is Joy Plummer and was a solicitor. Could I just start, Steve, and just say, I think this was your first time even using Hodge. How did you find the whole overall experience of using Hodge?
So it was first time using you guys. I called in just off the back of the obviously complexity of the case, just to kind of see whether it was something that could be kind of looked at. And yeah, I've got to be honest, from start to finish, like brilliant.
In terms of
the communication, everything was, great.
Cool. In terms of the case itself, I know it wasn't straightforward. Are you able to give us an overview of the case itself and how Hodge managed to help?
Yes. So it was a particularly tricky case. I wasn't actually massively confident that we'd be able to do much with it. Joy was part of an LLP, and she had, although she was still at the LLP, she was moving on. Now, she was what we were led to believe initially a sole trader under this LLP, but obviously that didn't make a lot of sense, and it turned out she was a partner. She was moving on, and when she was moving on to a new LLP, she was also transferring to limited, and she was going to be obviously she was coming under a banner of a new LLP with 100% ownership of her own limited company. However, the structure was changing because she was previously a shareholder in an LLP.
Right.
So most lenders were completely, no, we can't do that. If the structure changes, we're not happy to sort of look at it, to consider it. And the other really hard part in the case was to justify income for her, because it was a whole new entity, and we couldn't really, we obviously had her tax calculations. She'd been a solicitor for some time. But she, moving forward, justifying sort of where her earnings would be was particularly difficult, especially since when the case came to Hodge, she had been trading for, I think it was less than 1 month under the new limited company. So we had called you guys and discussed it with you, and I think it was Laura Jane I spoke to initially, and then yourself, and you guys had referred it to underwriting to kind of see whether it was something we could consider. You came back and obviously suggested this professional product and explained it to me and ran through, the ins and outs of it. Obviously, the sticking point with it was The first part that you guys were quite happy to consider was obviously the change in structure, which most lenders do not like. And the sticking point was going to be verifying the income and how we can justify the income going forward. Joy had a lot of experience as a solicitor. The loan to value on the case was below 50%. And in her previous role, she had generated, business, similar levels of business for many years that we could prove. The way we worked around the income was we were able to obviously explain the history and historic figures. Moving forward, she had signed an agreement with her new LLP to state that, these are the expected numbers. There was a business plan that they'd kind of put together when she was transferring across. We used the business plan along with previous years to kind of justify the income and to justify the lend, really. And I've got to be honest, I don't think there would have been another lender in the UK that would have taken that case.
So that's great to hear. Obviously, a real combination of unusual elements making up her case. And what I also think from the journey was your ability not only to have a sensible grown-up conversation with an underwriter, as well as the TBDM, Laura Jane and myself. We were able to relay to you the sort of things we'd need to see on this case in order to satisfy Rob and his team. I think it was Steve Samuel you dealt with, and to be able to get this case over the line for you. I think not only that, you had the ability, I think, as well, to have those communication lines yourself and talk directly, didn't you?
Absolutely. Steve, the underwriter, was calling me out of hours. We were under a real time constraint with the case, just because obviously it took a while to place in the first place, and she was caught up in quite a complex chain. She was given deadlines to complete, and I think from start to finish was about a month in total.
Literally.
You guys were great. Steve was calling me out of hours, asking me, giving me, any other information that he needed, anything that we could get. And as soon as I sent the documents or anything that we needed in, any info, it was looked at very quickly. You guys came back very quickly and agreed to do the case, which was great. Off the back of it, the chain that I was caught up in, sorry, Brad, the chain that the client was caught up in, there was 3 or 4 agents, and the property sizes were quite big within the chain. So the agents were putting the client under a lot of pressure as well. Since completion, those agents have all been in touch with me individually to kind of say, look, if there's anything tricky wise or anything that we struggle with ourselves, would you mind if we give you a call?
Wow, so that's a fantastic result. Not only have we managed to get your client sorted from our side of things, you've got a win-win situation with potentially 3 other agents that were in the chain looking hopefully to place business with you. So that's fantastic news, Steve. Really pleased for you.
Yeah, it was a great case. Great. Hodge were brilliant start to finish with it.
No, I appreciate that. Thank you very, very much. And thank you, Steve, for coming on and spending time chatting to us. Really appreciate that. What we'd like to do now, if it's okay, is just open up the opportunity for any questions to Rob. There he is, handsome devil, looking ready and willing to answer all your questions. So let's fire away.
Handsome devil, Brad. I mean, come on, that's stretching it a bit, isn't it?
Checks in the post, mate. Oh no, it's not check these days, is it? I'm showing my age. Cash in the post.
I thought, Rob, what we'll do, mate, we'll start off. We'll just give the guys on call just a little bit of info about yourself, mate. So we give you just a bit of a back. I know you've been with Hodge. Is it 6 months now, mate, since you came in?
6 months, yeah, that's right.
Just give a little bit of back of what you've done before, mate.
Yeah, no problems. I think before I do that, actually, just another thank you from me to Steve in terms of that feedback. It's always it's massively important to hear the good, bad and the ugly stuff, because that's the only way that we can kick on and improve. So it's really, really encouraging to hear that. So thanks for taking the time, Steve. Really do appreciate it. Thank you. In terms of me, so I've been at Hodge heading up the underwriting function now for the last 6 months. Prior to that, I've worked in sort of fintech startup lenders. I've been head of underwriting at Principality Building Society, done similar role at Bank of Ireland as well. So I've kind of been around the industry, probably all told, for about 30 years, mainly in sort of underwriting and operational management roles. So, I joined Hodge basically because I thought there was a real opportunity to start digging into these kind of underserved markets. It's all very well being a relatively straightforward binary vanilla lender, and that's fine. But quite honestly, at this stage of my career, it bores me a little bit, quite frankly. It's not particularly challenging. It's not thinking in a lateral way and thinking, right, okay, well, this isn't quite ticking all the boxes, but there's a deal in here and we just need to work together to kind of finesse it and get it over the line. That's what I was really keen to sort of bring to Hodge as well. Now that we're starting to play in more of these sort of underserved markets, looking at more diverse properties and incomes and personal circumstances and all that kind of stuff, and just bringing some of that experience in so that we can make really good informed lending decisions. And you'll have heard me say this countless times, Stu and Brad, my ethos that I've kind of driven the team forward with is that we start with a yes. That's the absolute critical thing for me, is we start with a yes. We don't always end with a yes. If things fall out of bed for whatever reason, then these things do happen, and we all know that. But the important thing is that we pick everything up with a view to, I want to do this case. That's where we're at.
Just see if there's any questions in there. So there's a question. Scott's got a question. So how would you deal with income for a barrister going through or having just recently finished Poolage, looking to buy their first home? So given the lack of decent income at that point in their career, but knowing they will see very large income in the coming year or two.
Yeah, I mean, thanks for the question, Scott. These are scenarios that do arise, and where we often find ourselves getting to is having that forward look. So we'll maybe speak to somebody at the chambers themselves and work out what the future fee structure is going to look like, what the future income is going to be. And really start to take a view on that. One came across my desk the other day, funnily enough, where it was almost that situation where the year-to-date earnings for this year were probably about 50% of what they're going to be in future years. So again, we took a rounded view of that, and we started to look at what the fee structure was going to be, what the anticipated earnings were going to be going forward, and we were happy to take a sort of sensible view of that, as opposed to just basing it on historic income, which doesn't really bear any relation to what's going to happen going forward.
I'm just answering. There's a question about JBSP proposition. At the moment, we don't do a jump by a sole proprietor. It is something we've talked about for a while, I think, at Hodge. I think Em's always mentioned it for the last 3 years that I've been here. So we don't at the moment, no, but it's not to say we won't do it in the future, I suppose, when we get a better systems, if I'm perfectly honest.
We got another question as well from Charlotte. So thank you, Charlotte, about when you're dealing with an accountant's projection, what qualifications do we need? And yeah, we're looking for pretty much standard stuff. If we're using a projection, we'd want to kind of understand what the accountant's qualifications were. Is it chartered? Is it certified? Just to make sure that we are dealing with something that we can really hang our hat on. But I think it is important to say as well that we will have a look at things like draft accounts. We will have a look at projections as well, and that kind of quirky self-employed income. If we can get comfortable with that with the assistance of a fully qualified accountant, then again, we're happy to take a pragmatic view of it.
So does that come about then, mate? If you've got someone who's gone from sole trader into limited, we can look at things like that as well at the moment.
Yeah, I mean, it's the same business. It's just a different structure. It's just a different, earning and taxation structure. And providing you can see that, yeah, it's just that business. It's just the change of status. I don't have any issue with that whatsoever. You know, there's a clear track record. With that will come that kind of time served experience as well. If they've been doing it sole trader for a couple of years and now they've gone limited company, so yeah, that's fine.
Fab. It's a question on Clay. Is this professional product for residential, buy to let, or both? This one is obviously residential, Clay. We don't do buy to let, we do holiday lets. And I suppose we haven't got a minimum income for that one anyway, so the holiday one doesn't really come under this criteria. But if you wanted to have a discussion on that later, just give myself or Brad a shout and we'll cover anything like that off for you as well. All right. So just the last one that I had down with beforehand, I think Steve, to be honest, has answered a fair bit of it. I was going to ask, what are we looking for when we make a pre-dip decision? So if we're coming to you with a case, what type of information are you guys looking for in underwriting for us to present to you without you having to go back and ask too many questions, basically?
Yeah, I mean, I suppose first and foremost, we love a story. You know, ultimately, the more color that you can provide, the more detail that you can provide, just so that we understand what we're being asked to look at and what we're facing into, the better. You know, we've got on the application form, we've got a section, as have a lot of lenders, where you've got that additional information. So if there's anything that you think needs drawing to our attention up front, then the sooner the better. I think, you know, what I'd also do is echo the words of yourself and Brad around the ability to speak. First of all, you know, you don't have to go through the rigmarole of submitting something prior to, you know, without any sort of surety of decision, without any confidence that we're going to actually be able to do it. You can pick the phone up, you can speak to us, and we'll be more than happy to go through it with you. So if there are things that you want to draw to our attention, then, you know, make sure you utilize that additional information box. But the lines of communication that we've got, you know, I'll as you know, Stu,
Yeah,
we'll speak probably on a, you know, every day, every other day, whatever it is, you know, and that goes for me and the rest of my team as well. So, you know, the lines of communication really are there. So do that pre-submission check by all means, and we'll happily talk it through, as opposed to just taking that instant judgmental kind of yes or no approach.
good. There's a good question from Scott just come in. No,
It's
a great one, actually.
It's another question. They keep coming.
I'll read that one, Rob. See what you think of that one, mate.
Where do we know?
So what would be your view if a solicitor is moving from, say, a magic circle firm as an employee and setting up as a consultant solicitor, so self-employed and normal sole trader, but with no track record of self-employment, only their skills, expertise and history as an employee elsewhere?
That's a great question. So look, ultimately we have the ability to do self-employed applicants who've got less than a couple of years trading. So, you know, there's nothing to say that we have a hard and fast rule on that. What I'd be looking for is to probably understand the overall risk on this. You know, what are we looking at LTV wise? What are we looking at in terms of track record? It's difficult because obviously, given our responsibilities in terms of responsible lending and the regulatory responsibilities, we've got to be careful that we can clearly demonstrate and articulate the affordability calculation that we've taken into account. So if we are looking at something and we don't have any track record of earnings, then that's going to be a little bit tricky. But if we've got somebody who doesn't meet the 2-year trading history, but it's somebody who's in an acknowledged profession, it's somebody who's got a clear track record, then, you know, I'd be happy to look at that. But if they don't have anything at all, that's going to be incredibly difficult from a kind of responsible lending perspective to clearly show that we have assessed the affordability in the way that we should.
Charles asked a question about a qualification. Charles, I'm just getting one of the girls in head office to check that qualification for you on the account, and we think it's okay, but I'm just going to double check that for you as well now. Any other questions, guys? Anyone's got any burning questions at all? No? Okay. Charlotte, if we don't get an answer back before we close this down, I've got a
What was
copy of your address.
sorry, what was the question, Stuart?
The accountant as MAAT, is this acceptable? So it's an accountant's qualification, mate.
Oh, so the accounting technicians. We'll do MAAT, or I think the other one's FMAAT. They're both okay.
There we are.
Straight from the horse's mouth.
Magic.
Brilliant.
All right, Rob, thank you for your time again, as always, mate. Much appreciated. We do really appreciate it. So, yeah, thank you.
No problem. Thank you all, guys.
Cheers, Rob.
So, Brad, I think that just leaves us to thank everyone again for dialing in.
Yeah. Appreciate everybody's attendance today. I'm sure you'd rather be out sitting in the sun, eating ice cream or having a nice cold beer. I'm sure we can defer that until this afternoon. But on behalf of myself and Stu and Rob and his team and all those behind the scenes helping to put this together.
I'm going to jump in there a second, Brad. We've got a last minute question from
Phil.
Go
for it.
Yeah, last minute. Cut that fine. And the question is there a debt to income ratio? So no is the quick answer to that, Phil. What we'll do obviously is we'll run credit score, we'll run credit search. Make sure that we're happy that there isn't an excessive amount of indebtedness, but debt to income ratios for me are just too blunt an instrument, because you could have an asset purchase, a big car finance with a balloon on the end. So technically it looks like a massive debt, but the reality is they're never going to repay it because it's just going to keep rolling it on. So I don't really like debt to income ratios. I'm more interested in the composition of the debt. If it's a load of revolving credit right up to limits and all of that kind of stuff, then obviously we'll be on shakier ground. But if it's something where you can see that it's an asset purchase for a car or something like that, then I don't believe that people should be sort of penalized for that. So no debt to income ratio, but obviously we'll just make sure we'll just do a background check.
Yeah. And there's one last
Rob,
one just before we
They love you, mate. They don't want you to go. Scott Taylor Barr is on a roll. He's now saying, if a dentist was moving from an associate to partner, would you be happy to use share of profits? For example, looking at the company accounts as if they were a partner. See more, rather than their PAYE income for mortgage purposes.
Yeah, that's something we can look at. We'd need to get something either from practice manager or the external accountant just to look at, what that's going to mean in practical terms from a business, from an earnings perspective. But that happens a lot, where you see people going from associates to partners in, solicitors, dentists, all of that kind of stuff. The bottom line is that it's an established business. It's not as if they're starting up a brand new business. They're moving as a partner into an established business. So we'd be happy to look at that. We would just need to understand the future potential income, and we get that, like I said, either from practice manager or the external accountant.
Cool. Any more, or are we happy to let Rob go back and deal with all the lovely applications that you're going to be sending us? I think we could be done. Right, I'm going to go for it. Again, thank you guys. Thank you so much for your support and attendance today. I really appreciate it. If there's any questions or anything, please do use the website, find our details for all the TBDMs and all the field-based guys. Give us a call, drop us a line, drop us an email. We'll love to talk to you. It's what we do best. But thank you very, very much for your attendance today. And I hope you found it a really useful webinar, and watch out for the next one.
Cheers, guys.